a lot of questions that we've received from investors related to some of the geopolitics and the flight to safety, and the flight to safety actually going down. So there's a lot of headline news, a lot of clickbait that's out there recently. Some of the headlines that I actually looked at from today: warnings of $200 barrel of oil as the Strait of Hormuz is sealed. Oil surges, stocks plunge as fears of a prolonged war hits markets. I saw something, the Dow plunges 1,100 points earlier today as investors fret over war. A lot of concerns over crude futures surging as much as 13% to top 82 a barrel, with West Texas crude just below 71. We think it's really important to state markets are always going to be volatile. This is not the first time, and it's certainly not going to be the last time that we see volatility. It's certainly been exacerbated by some of the recent news of the past couple of days. Today, again, is March 3rd, 2026. We did see the S&P drop as much as 2.5% earlier today. Now it's come back somewhat, and we're closing just about to hit close of market in a couple of minutes here. It should end up closing down about 1%. So it's still down significantly, but saw a very steep spike from earlier today. What about price earnings? Price earnings for the S&P still sits around 30. The cyclically adjusted ratio is closer to 40, but keep in mind that really should be in normal times around 15 or 20, even a tad higher when you think about high growth technology stocks. And we have had some blips along the way, like COVID, but it has essentially been 26 years since we've had a major market correction. So the big question again is generally what happens when there is global unrest and uncertainty. I think the first is just obviously overall fears of a broader market correction leading to a flight to safety. And typically we see three asset classes that are sought after. The first one is precious metals, gold specifically. The other is treasuries. And the third is real estate, although we've seen record high gold prices as well. So, Ty, let me turn it over to you for a minute and just get your perspective on what you've generally seen in periods of volatility and how real estate reacts to that.
Yeah, well, I think, we've been discussing for quite some time now that this economic environment and this looming, if you will, market correction mirrors very similarly to the 1999-2000 dot-com bust. Which, that bubble happened, and then there very soon after 18 months or so, we went to war because of the World Trade Center conflict and everything that happened because of that. And so, there's a lot of similarities here. Conflict brings, especially conflict in the Middle East, brings a number of concerns to the marketplace. This time we've got these AI stocks that have significantly been arbitrarily valued based on expectations, and those expectations of what they're going to bring to the marketplace have maybe dipped a little bit over the last few months, and we're starting to see somewhat of a correction there. And then you bring in this conflict, and it's going to exasperate that more so. And you step back and you've got to look at your portfolio. You've got to look at your finances. You've got to look at everything that's going on around you and say, where do opportunities lie? And if for somebody like myself, leading into this, I've been looking at a number of and acquiring a number of defense stocks for the last 6 months or so. About 12 months ago, my dad and I sat down. We had a long conversation about our portfolios, and started really looking at a number of defense stocks at that point. This is, if you're looking at those now, it's probably a little bit too late. But we've done very well on those, and we'll continue to do so. But we're also going to see a lot of these tech stocks start to revalue pretty quickly, and so you've got to say, okay, where does the opportunity lie? And we've seen infrastructure being moved from the colder markets where typically it's more efficient to get energy because you don't have to cool a large hot space, with all the computers that are running, but they're looking at areas that have low infrastructure now and focusing more on the incentives that those markets and those communities will bring for building infrastructure in the area to run these tech companies. And so, we've got portfolios in a number of target cities that these tech companies have identified as where they're moving to build infrastructure. And it's taken a huge boost to our real estate portfolio there. And so, real estate becomes a great opportunity, as it always has during times of conflict.